All right, guys. So today we have the GDP data. Jobless claims also come out today. What else we got? And then tomorrow, and then all of next week are really going to be busy here. So GDP data, jobless claims coming out. Let me know what you guys expect. The expectation from the analysts for GDP are 1.2% year over year. Jobless claims are expected at 218,000. So we'll see what that looks like as well. We'll put this up. All right, so GDP data as well as jobless claims drops live at 8:30 a.m. Eastern Standard Time right here. What's up, Alyssa Pawn, Asif J, Goose? What's up, chat? All right, let me put this up. I got this really old playlist, bro. I'm telling you, this playlist is legitimately like 6 years old, and I kind of slowly add songs to it as time went on. I'm gonna go very we usually only catch the first half of it, so I'm gonna try to go all the way to the end to catch some of the earlier songs, get some nostalgia in here. I can't even remember what they're sounding like. I wish you gave me like a date on when I added this. There we go. All right, so we're all the way at the end of this playlist. Man, all right. All right. Q down a little bit. Here's the SPY. Nvidia still 1130s. Yeah, so they're saying it'll be revised to 1.2%. Correct. But I would argue, look, all right, so again, I'm going to break down like first revision. There's a reason like the revision data can sometimes be more important than the regular data. All right, so the first GDP data is called the prelim or advanced estimate. So really it's just a prelim or advanced estimate. It's usually released shortly after the end of the period it measures. So within a few weeks after the quarter that it measures ends is when this data comes out. Hold on. At that stage, it's pretty incomplete data. Like, it's not the most accurate, complete data. Economists use models and estimates based on data they have so far, but it's not the most complete data. It's the initial insights giving a quick look at how the economy performed during the period, but it's subject to change, right? And so when we look at GDP data, the initial estimates, they can change a lot. They're not the most accurate, I guess is the easiest way to put it. The revision and the second revision, and then what today's what's called the final estimate. It's the third revision. It's the last revision of the quarter. Basically, the revision GDP data after the first one is released, it's more detailed and complete data. It's more detailed and complete data as it becomes available. Economists revise their calculations and provide more accurate measures of GDP. The revisions typically come in two stages: the second estimate and then the final estimate. The second estimate is more comprehensive data has been collected, and they're kind of updating it there. Economists update their GDP calculation using the data that came in, which may lead to higher or lower GDP than the prelim estimate. Better accuracy for sure in the second estimate. It's more accurate than the first, but still not final. And then today's is what's called the final estimate, the complete data. Nearly all the data needed to be calculated is available, and it has the highest accuracy out of all of them. So I'm pretty sure today's is the final estimate. Let me make sure. I just want to make sure, but I'm pretty sure today's is the final estimate. Okay, I'm sorry. So today's is the second estimate. So today's is important. All right, so it's the second estimate for the first quarter of 2024. It's based on more complete data compared to the initial estimate, but it's still not the final one. Okay, gotcha. Yeah, so I was wrong. Yeah, so today's is the second estimate. But yeah, that's basically what this all means in terms of GDP data. I already knew this, but AI certainly helps. Tesla flying up to 178. Dude, I have this like pain in my pelvic bone. I don't know if it's from jujitsu. It's got to be. Sometimes it really sharpens up. Ugh. Alright, so basically AI thinks it's from jujitsu. Plausible, I guess. Tesla's popping up today. Let's see if let's see what the news on Tesla is. Tesla is ripping up. I see Mitsubishi Materials is going to acquire some stake in another company. Toyota April global parent-only vehicle production fell 4% year-over-year to 756.3 thousand. April global parent-only vehicles fell 0.5%. Check it on Tesla here. Again, GDP data is very important today. It should move markets. All right, so Google, Amazon, and Airbnb won their fight in court versus in the Italian ruling dispute. We got EU economic reports coming out. Boeing, outgoing CEO and other company officials will detail company's quality training and other improvements during this meeting with U.S. aviation regulators today for Boeing. Hormel released owners. Tesla is preparing to register FSD, autonomous driving in China, according to Reuters sources. So that's what the news is. So again, we'll put this up on screen, but yeah, that is the news. Tesla is prepping to register full self-driving, autonomous driving in China, is what the news is. I'm busy buying a couple more 250,000s at the moment. What do you mean 250,000s? Yeah, so Salesforce dropped numbers yesterday. I didn't cover them. I didn't think it was big enough, to be honest. But Salesforce dumped here. It might be time for me to buy this dip. Salesforce down to 270s. Or no, Salesforce down to 220s. Wow. Yeah, I'm buying this dip for sure. Let me buy it up right now. I can't buy it right now. I gotta wait 20 minutes. I'm gonna buy this dip almost certainly for Salesforce when it opens up. What did C3 end up doing? C3 ended up ripping up, so C3 AI did well. Both of these are based on earnings. 250K evals. Yeah, jobless claims are a weekly report. Yeah, I'm certainly gonna buy up some Salesforce. I'm not telling you to buy it. I don't know whether you should or not. But yeah. Well, GDP data is huge economic report. It's gross domestic product data. One of the biggest economic reports. Jobless claims or unemployment filings. That's how many people are filing for unemployment. So both of them are relevant to the economy for sure. How relevant, we don't know, but yeah, they're big reports. They're important. Yeah, I'm gonna have to buy a couple 250K challenges. You still got basically all day today left, though. Oh, coffee tastes good. I just want Rhythmic. I got a couple Tradeovate funded accounts, but I like Rhythmic. Yeah, so it's $18.08 after tax for the 250K one. I'm gonna buy one of those. Buy another one of those. I'll buy like 5 of these real quick just to finish. And we'll buy a couple. I just want to get funded on one, and I'm not too concerned about it. I kind of like going with the smaller ones. All right, so look at the queue bouncing back here. Again, I'm patiently waiting 15 minutes so I can buy Salesforce. Yeah, all good, Paul, man. Rest if you need to, brother. It's all good, man. We could chat tomorrow. Buy CRM if it gets to 200, double your position. Yeah, I mean, I'm not telling anybody what to do, but I'll probably at least add some. I'm a little concerned. I hope it doesn't bounce back too much. But I like the dip. I think there's just a lot of room on the upside for it. It's just I think with Salesforce, you gotta take a small position. You know. It looks like TQQ is just a cheaper SPY or a cheaper Q trade. All right, let me see what else we got. Yeah, look, there's the Q bounce back. Yeah, for sure. The drawdown's a little bit better on the cheaper ones, and so that's why I prefer to, you know. And again, I got funded on a couple yesterday, as well as made some money on my actual funded account yesterday. Yeah, so on one of these funded accounts, we just basically need to activate it. And then on the other funded account that I'm on the PA account, okay, yeah, we ended up making money yesterday on this thing too. Yesterday we made, on our PA account yesterday, we made about $475.60 when all was said and done. Here's my trades yesterday on my funded account. It's a 50K funded account. You kind of see we had about 73% accuracy. We made about 475.60 net. Gross was 550. Total profit was about 1,400. Total loss was about 850. So not too bad of stats there. Yeah, I usually take a nap in the afternoon too. That's just kind of how I am. Especially with the kids home where we don't have much else to do. I fall asleep late and rest. All right, so there's the SPY. Again, I'm waiting to buy Salesforce. Luckily, it's not moving, but the SPY is filling the gap a little bit. The Q is filling the gap a little bit. NVIDIA gapping down some here this morning. Let me pull up Twitter. I haven't really pulled it up today. All right. All right, guys. Dude, I read this post about a scammer, and I thought it would end well, and it didn't. All right, chat. Again, we're sitting there patiently waiting. I want to buy Salesforce. Now, it might be risky if Salesforce really dumps. You know, I'm not going to take anything. I'm trying to think of what kind of size I want to take for Salesforce. Salesforce, just to put this into perspective here, listen, I'm not telling you to buy this. Do not copy me. I'm not an investment professional. I'm not liable if you lose money. I have no idea what I'm talking about. I might be wildly wrong about everything I say. Do not copy me. Not an investment professional. Not liable if you lose money. Okay? But Salesforce is down a ridiculously large percentage short term. Salesforce is down, let's see, it's down from 71s down to 28. So Salesforce is down $40 roughly, like roughly $40, like $41 a share. So 41 into 270s is about 12% or so, if my math in my head is right. About 12%, right? Is that right? Something like that. Let me make sure. So going down from 270 to 230 is about 12%. 14%, 15%. So it's actually a little bit more than that. So very large dip percentage-wise. So again, when a big company like this, like what were the numbers that caused this massive drop is what I got to figure out here for Salesforce. Deutsche adjust price target. Citigroup adjust price target. See second quarter revenue coming at 9.5 billion. What was the expected number here? So it looks like bad guidance. EPS 994. So Salesforce fiscal year 25 adjusted EPS came in higher than expected. Revenue guidance came in higher than expected as well for 2025. Second quarter adjusted came in worse. Second quarter revenue guidance came in worse. So bad guidance in a lot of ways. Missed estimates, beat EPS estimates, missed revenue estimates. So interesting. I'm still probably going to buy it. It's just down too much. Scammer. Who's a scammer? Bro, the only thing I'm scamming people out of here is their free time. I don't charge for a course. I don't charge for a service. I don't claim to be a good trader. I don't claim to be an expert. I don't act like a guru. I literally tell people I'm the worst trader of all time ever in the world and that almost all day traders lose money. And so if I'm scamming anybody, bro, it's myself over here, okay? Now, you could act like I'm a scammer because, you know, but anybody that actually watches this stream knows that's not true, you know? but let it out. It's okay. Anyways, chat. We're getting ready to buy it. I think I'm gonna buy like 5 to 10 shares first and see what happens there. 5 to 10 shares. All right, chat. Get ready to buy this up. Top 3 worst scammers in the world right now, you know? Yeah, like, listen, this is my disclaimer, you know? Remember, I am terrible in this stuff. Have no idea what I'm talking about. I may be wildly wrong about anything and everything I say here. This content is entertainment only, and my experiences, win or losses, may be conducted off stream. Do not copy me. I do trade off stream sometimes. Understand CFTC 4.41, hypothetical simulator performance have limitations, all that good stuff. All right, Tesla's still breaking up, almost to 178. Or almost up to 178.50s. Still moving up. All right, guys, GDP data today. I wonder if we're going to get choppy behavior heading into the open. The NASDAQ's still gapping down some. All right, here we go. We're probably going to buy Salesforce up a little bit. We still got a couple minutes left. All right, let me do a poll. I don't think I did a poll yet. Yeah, so GDP data today is huge. All right, guys, here we go. Yeah, do we have some earnings today? I think we do. Oh, we got Foot Locker earnings. They're supposed to drop at 6:45, which means they're supposed to be out already, and they are out. They posted 22-cent profit per share versus 12-cent estimates. I'm not sure what their revenue showed up as. We had DG earnings come out. I'm surprised DG's doing better than expected, though, because Dollar General's got to fail long term. No? Maybe I'm wrong there, but they're out. All right, we can now buy, again, I guess we're going to buy 10 shares of CRM. It's a risky thing, but it's all good. All right, we're in 10 shares of DG. Or no, I'm sorry, of CRM, not Dollar General. We bought a couple shares of Salesforce. It's just down so much, I think I have to, right? I'm also going to short a little bit of the NASDAQ here in futures. So let's do it. I'm going to short a little bit of the NASDAQ. Just one contract here. This is my funded account on Apex. Yeah, so you can see we're up about $50. I'll go ahead and take that off. So we just made about $50 shorting the QQQ here. Nvidia dipping down a little bit. Again, we did buy CRM. Well, the expectations are, again, it's first revision, it's second revision, P. So it's revision data. So like they get the initial data, and then as more data comes in, and as more understanding of what GDP might potentially show comes in, they update the data, right? So it depends on what you consider good. If you consider economic growth positive and slowdown of economic growth a negative, then sure, lower GDP might be a negative. I think what you have to understand, though, is that with inflation fears being on the rise, I think it's important to note that the market might not necessarily want economic growth in GDP. That signals more potential inflation problems, and I think we've already had a ton of inflation over the last few years. So, yeah. All right, guys. Hmm. All right, so we did get a little pop at Nvidia. I think Nvidia is still that big market mover you probably want to pay attention to. We might add more to CRM if it continues to dip, but Pure Storage, yeah, I don't know enough about them. Yeah, I mean, the problem is this, okay? After 2020 and the pandemic, the Fed stepped in, and the way the Fed controls the economy is through interest rates. If inflation's a problem, they raise interest rates because that will discourage spending. If people are paying more money in mortgages and auto loans and stuff like that, then they're not going to spend as much. And so if they want to slow spending down, if the Fed wants to slow spending down, they will raise interest rates. They will raise short-term interest rates called the federal funds rate, and this will eventually trickle into long-term rates. And the opposite is true if the economy's at risk for a recession or depression. And so if we're at risk for a recession or depression, the Fed, like 2020, in the pandemic, the Fed will step in and they'll bring interest rates down. They brought interest rates down to almost zero, and the short-term interest rates, that is. Eventually, that trickled into long-term rates, and they also sent out stimulus checks. And so the consequences of these things, all these things, lowering interest rates and stimulating spending, the consequences is inflation. Prices spiked, And again, the public's going to complain no matter what. If the market's heading towards a recession or depression, they're going to complain about that. If the Fed has to step in and lower interest rates and stimulate spending, and inflation spikes because of too much spending, people are going to complain about that too. But one of the consequences of 2020 and also the stimulus checks and lowering interest rates to consumers from the Fed, and they do this through a number of different ways. First off, they can just straight up cut the federal funds rate, like they'll just straight up lower short-term interest rates to the federal funds rate, or they'll do a more desperate measure called quantitative easing, which basically means they expand their balance sheet and buy up a bunch of bonds. This allows banks to lower interest rates to consumers, and they did that. They did QE in 2020 as well. And again, the consequence of all this stuff was inflation. We had massive inflation spikes. The stimulus checks certainly contributed to it as well, but we had massive inflation spikes over the coming years because of that, right? Inflation spiked, and inflation got up to almost 9% or over 9% at one point in time. And so, and the thing about inflation, I've said this many times, but I'm going to keep explaining it. But the thing about inflation is that inflation very rarely actually goes down. Like, the best you can try to do is slow it down. You want to slow inflation down. And so once prices go up, they very rarely go back down. And so what people are still struggling from is the prices that rose over the last 4 years. Current inflation is not terrible. It's not like it's out of control, but prices have gone up so much in the preceding period of time that people are still upset and they're still struggling and they're still adjusting to it, I guess is the easiest way to put it. And so in that regard, I don't think the public can necessarily handle more inflation problems. I think inflation should be our number one priority. Controlling it, that is, controlling inflation should be our number one priority. And again, right now, like tomorrow we have PCE inflation data. It's expected at 2.8%. CPI inflation drops early next month. But yeah, it's an important thing to get under control right now. And so looking at GDP data and jobless claims in that matter, with that lens, under that lens, looking at GDP and jobless claims, the question is, what does the market want? Does the market fear inflation? If it does, lower numbers here, higher jobless claims and lower GDP might make a positive reaction to markets. If the market fears weakness in the economy, like if the market fears weakness in the economy, then they might want higher GDP, which is more true to convention, I guess. Because in normal circumstances, we don't really have these inflation problems. Nothing's really normal. It's all balanced. But yeah, that's basically what's going on right now. And again, right now we're 4 years after the pandemic, and inflation is not the worst right now, but prices have gone up so much that everybody still thinks it is, right? Everybody's acting like inflation's at 6, 7, 8% right now. That's not really what it is. Prices have just risen so much in the last 5 years that people are just not used to it. And so, yeah, let's see what the market wants. I don't know what the market wants. All this data drops at 8:30. I'll put the timer up here. Yeah, so this data drops. Really, this is actually pretty accurate. It drops in about an hour and 23 minutes. But it's actually an hour and 22 minutes. It's weird that I pulled this timer up and it was exactly where it should be almost. But yeah, there's the timer at the top left of the screen, 8:30 Eastern Standard Time. We do have a little pop-up in Salesforce. So Salesforce is popping up. We're in Tesla right now. My portfolio is basically flat on the day today. Tesla's slightly green. Target, man. We bought Target a couple days ago. Lovely trade, man. Just love the trade. Roblox. Palantir is green. I'm still sitting in Nike, but I'm down on it. Intel, I'm still in that one also. Coca-Cola, I'm green on that one. That's nice. Google, I'm nicely green on that one. Ford, I'm flat. Delta Airlines, I'm green. Chewy, I'm green. Baba, I'm green. Airbnb, I'm green. Apple, I'm green. Nice. Okay. Not too shabby. We'll take it. We'll see what happens with the rest of this stuff. But again, we bought Salesforce. Yeah, I don't know. I'm in Boeing right now, but it's a very small position, so I don't know what it's going to look like. Dude, social media, bro. I don't even watch soccer, but it's got me watching soccer highlights of the best jukes, I guess, in history. Soccer, I just, it can't hold my attention. And for somebody that watches baseball, I get the contradiction there and the irony of somebody that's like a big baseball fan not liking soccer because it's too boring. But it probably has to do with me not knowing the sport very well. Speaking of that, what do you guys think about the fights this weekend? Those should be fun. Bond guy from BLK says we now need to lower interest rates to ease inflation. Mid to wealthy are benefiting from higher rates and causing service inflation. Interesting viewpoint. Yeah, I mean, I think we need to get inflation under control. Lowering rates is never going to help inflation. It's not going to, lowering rates is not going to ease inflation. I get mid to wealthy are benefiting from higher rates and causing service inflation, but I think overall, we need to keep interest rates high, regardless. It doesn't matter who's benefiting or what. We need to keep interest rates high, because if we lower interest rates too soon and spending picks up and inflation spikes, it's going to be hard to get it under control. And then we're going to have a period of time in which we've had such bad inflation short term and prices have gone up so much that it's not sustainable for the everyday public, right? And I think that we're close to that now, and I think if prices go up any more, then it's going to be like that for sure. And it's something that we need to just be really weary of and make sure to get inflation under control first. You get a lot of pull from like people heavily invested into real estate. So like mortgage brokers, real estate agents, like people like that are desperate for the rates to go down, because again, you got to think about it in terms of business, right? Like their businesses are struggling. Like interest rates 7-8% are very difficult to do business with. Less people want to buy homes because interest rates are so freaking high. But it doesn't mean we should lower rates just to please them. Again, I'm a real estate agent myself, right? But I don't care enough about it to. I would rather keep interest rates high and discourage spending and make sure it's really under control. Well, the mortgage market is failing because interest rates are high. But again, we can't worry about individual sectors. We have to worry about inflation, number one. Like again, mortgage brokers, real estate agents, they want interest rates to go down, of course, because they want more business, right? But we can't just pander to them and wreck the economy through high inflation. Like we can't just do that. Like we have to make sure inflation's genuinely under control first, and I would argue it's not right now. I know you want rates to stay high, but I'm 35, 100K plus a year and can't qualify for a home. Right, but that's because inflation has spiked, Michael. 100K a year is not that impressive. No offense to you. I'm not talking smack, but 100K a year is nothing, brother. Nothing. Like, it's not the high income that it used to be. 100K a year is really not that much income right now. You know, you got freaking Uber drivers making 100K a year. And so just because you make 100K a year doesn't mean you should qualify for a house. It depends on what house you want. You know, if you wanted to buy, depending on your credit history, of course, if you wanted to buy like a $200,000 to $250,000 house, you should be able to do that, and you will be able to do that with 100K. Again, it has to do with what kind of house you want to buy. I think a lot of people live above their means and they want to buy, and I'm not saying this is you specifically because I don't know your situation. What I'm saying is that keeping interest rates high is the only thing that we can really do to control inflation. And if we cut rates too early, inflation can spiral out of control quickly. And so it's something that we need to make sure we get a firm grasp under. Again, there's always a lot of pressure from real estate agents and mortgage brokers or whomever. But again, we can't pander to them. We have to make sure inflation is under control first. Well, yeah, if you're in South Florida, brother, you know, like the Miami area, 100K a year, 180K is not much. I mean, 100K is probably middle class, you know. And so you can get a home, you know, but you're not going to be able to get the home you want. Again, standards have changed. Again, 100. Look, I'm not knocking you for making 100K. 100K a year is good. You know, it's not bad. But at the same time, if you genuinely make 180K a year and your expenses aren't too high, you should be able to save up and just pay cash for like a $250,000 house, right? Like within a year or two, you should be able to just buy a house cash outright. As long as you're living within your means, brother. You know, and again, I don't know. I'm not saying you are or you're not. I'm just saying if you make almost $200,000 a year, you should be able to save up, buy your own home, you know, cash without needing a mortgage. And now's the time to do that, to be honest, right now. Now's the time to do it before interest rates go down. Well, yeah, it depends on where you live. But in Florida, a couple $100,000 a year is really good. But depends on where in Florida. If you're in Miami, it's nothing, you know. Yeah, also, guys, you can see Tesla spiking up now after they have news that they're prepping FSD overseas. Tesla up to 177s, 178s now, so that's good. Right, that's what I'm saying. Miami, it's nothing. It depends on where you live. Everything is, one thing that you realize here in this country is that it's all relative to where you live, right? $100K a year is nothing in California. It's nothing in New York. It's nothing in Miami. $100K a year in like North and South Carolina is very good. And Louisiana is very good. In some parts of Texas is very good, and Arkansas is good. It depends on where you live. It depends on where you live. $100K a year, in some places in the Midwest is very good. It just depends on where you live, So if you work remotely, you really want to consider moving to I know if I worked remotely and I was struggling in that regard, I would move to a place in which my income was better suited. You know what I mean? So like I would move to because there's really nice places, man. There's really nice places. I'm Arkansas, no offense to Arkansas, but I'm not moving to Arkansas. But like there's nice places in the country that have a cheap standard of living that you could do really, really well with $100K. But you have to live in the right spot. Again, Miami is not the place. Orlando is expensive as well, so it just depends. I could move to Tennessee, Georgia, it would be solid, but I like the lifestyle. Yeah, I get you. Like, I understand. It's just one of those things where, I don't want to have to keep up with the Joneses lifestyle. Like, I really don't. And I make very good money. Like, I make very good money. I'm not trying to brag or whatever, but, I make, I'm not going to say how much I make, but I make very good money. And so, but I'm also not, even with the money I make now, I'm not going to move to a super high, a super expensive place. It just doesn't make sense, I mean, I'm in Texas and I live in a nice place, but like, it's all relative. If I move to California or New York or, Miami, it's going to be, again, I'm going to be spending all my money just to kind of keep up with the Joneses of price and lifestyle there. And I don't care about any of that stuff. I would rather stack my money, live in a relatively cheap place, and just save, invest, and stack my money. I think that makes a lot more sense than living in one of those super high standard of living places just to say you do it. Like, I would rather be a big fish in a small pond than a small fish in a big pond, like in Miami, even what I make is, it's not going to be considered that much in Miami, in all honesty. So it just depends on where you live, Yeah, I don't live in Louisiana. I'm not dogging Arkansas. Arkansas really is beautiful. I'm not knocking Arkansas. Great hunting land, great fishing spots in Arkansas for sure. But again, I'm just not going to live there. I don't know anybody there. I would move to, I'd probably move. I don't know. I like Texas, and I live in Texas, but I'm not knocking Arkansas, man. Arkansas. John, but you have 5 income streams? Sure. I'm not saying, I'm not trying to sound self-righteous or condescending. I'm really not. Like, I'm just being honest. You got to live within your means. Like, I'm the type of person that I never buy anything for myself. I really don't. I only recently started buying a couple things for myself over the last, like, couple weeks. But I don't ever really spend money on myself at all. If I spend money, it's on my family, because I want to take care of my family, you know. But, like, I don't ever buy myself any fancy cars or anything like that, really. Even when I could, you know. And so I'm the type of person where I just kind of save. Put my money up, buy investments and stuff, and rinse and repeat that over time. No, I think you can get by really. I think you probably misinterpreted what I said, Johnny. I think you can get by pretty well in Arkansas with a 100K salary for sure. Like, you could live like a king there to a certain extent. Now, it's not really my place. I'm not really trying to live in Arkansas, but it's, you know, it's subjective. You could do really well there relative to the rest of the country in terms of income to lifestyle ratio, I guess. All right, guys, Tesla dipping down. It's under 177.30s. All right. So we did buy, we did buy Salesforce. We're flat, basically, completely flat on that. Glad you're not a Wall Street Bets type of guy that gambles their money on options. Yeah, I mean, I don't like gambling money at all, and my weakness money wise is probably that I'm a little bit too careful, I would say, with money. Like, sometimes with money you have to, it's high risk, high reward, and like with venture capitalists like VCs, you know, you're gonna lose on most of your investments in VCs, and then a small percentage of them are gonna compensate for the ones you lost on, in theory, right? Like, that's VC investing 101. My weakness is that I'm too careful, and I end up not jumping when I should into things. And so I usually just kind of sit on money too long, I would say, instead of investing it like I should, deeper, you know. I think that's the big issue. But if you diversify, you should be all right. You know, an interesting money concept is this, though. You know, the classical convention of money is that diversification is king. Like, if you diversify, you should be set. But if you talk to most modern billionaires, most of them got really, really wealthy going really, really big into one idea or one concept, right? And so the question is, which is better, to diversify into many, or find something you truly believe in and that has a big edge long term and go super heavy into that one thing? Let me know what you guys think. Which one do you think is better? I think diversification is safer. If you want 100x your money, the second one's the best one, obviously. But again, I think it depends on risk tolerance. I'm not saying you go all in on one thing, I guess. What I'm saying is, like, you go small into other things and go really big into one. HPQ after the report. What's going on there? They just had good earnings. They're gapping up a little bit. Depends on your age. Yeah, for sure. Yeah, that's probably true. All right, guys. We got a little bit over an hour left before jobless claims data and GDP data drops. A little bit over an hour. I'm in Texas. Yeah, I think if you are doing really well, you can take bigger risks for a bigger reward. If you don't have that much money, you want to build a base nest egg and diversify into safer assets, right? Like, I think that makes a lot of sense, and I think that's probably the right move. But once you get reliable, steady income that's good enough, right? I would say if you start making over like $400,000 a year, steady, that's when you can start taking larger risks, maybe doing some VC investing, stuff like that. I think that makes a lot of sense. But again, everybody's different. Everybody has different risk tolerances and everything like that. It depends on whether you have kids or not kids. You got a lot more planning to be involved with. And so, it just depends on your situation. It's subjective. Yeah, T said, what happened to your opinion polls? You were moving away from things that made your channel great. The internet is so weird, dude. Like, it's so weird, man. I forgot to do a poll today. Now, all of a sudden, I guess, cheers to you. I'll update the poll right now. People are weird, man. Here. Are you bullish or bearish on today's GDP data? Expected 1.2%. Bull. Bear. All right, so vote on that poll. Let me know what you guys think. We got an hour before this data comes out. We did buy Salesforce. Yeah, let's not get too political, please. I think one thing that everybody's getting wrong is not DCAing into the S&P every month, no matter what you're making. This should be go 100%. Long term, that's the long term. That is the way. That is the way. Yeah, the people that lose the most during crashes are people that get emotional and sell, for sure. Alright guys, the queue up to 455s, Nvidia at 1144s, Tesla at 177.75s here. All right, so look at Tesla back up to 177.70s here. Nvidia still up. The queue is up. I bought a little bit of Salesforce. And we're green on that one too. Okay, nice. What is your trading strategy? I mean, I do a little bit of everything. I scalp day trading. The way I'm the best though, like what I'm the best at is not day trading. I would say what I'm the best at is probably swing trading and investing. What I typically do is I look for really deep, extended emotional reactions, like big percentage drops, mostly in blue chip healthy companies and maybe some mid caps. And I wait for them to pull back big percentages, generally over 10%, and I buy up those dips. Again, they're only healthy companies that I think are going to be around a long time. Once I do that, then I buy it and I sit on it. If I'm right short term, I'll take some profit. If I'm wrong short term, I'll sit on it, maybe average into it some more and wait. 1 hour left until GDP data and jobless claims come out. So we got an hour left. Where's gold at right now? Gold. Where's Bitcoin at? Bitcoin up to 68K. So Bitcoin bouncing back a little bit today as well. AMC GameStop flat. Kind of boring and slow. Not really much action there. Any thoughts on UPS and Home Depot? I ended up buying Home Depot a couple days ago. I might add to this though. What I did was I bought a Home Depot and then I added back to it. I'll probably add a little bit more to this, just because I think, yeah, I'm gonna add a little bit more to Home Depot. Because okay, and I'm gonna give you my argument for it. It's pulling back heavy into a major support level. That's number one. Number two, again, it's pulling back into a major support level. That's number one. Number two is, you know, in terms of like analyzing businesses towards whether they're obsolete or not, right? Like a lot of businesses are going obsolete because of mail order efficiency improvements. So like shipping things online has gotten a lot more efficient over time, and it's evolved to where most people get things online. I think one area in which that is not the case is home improvement goods. I think while some people buy some stuff online for that, I think you want to go buy wood, you want to go buy tools, you know, you're going to go buy them from Home Depot. You're not going to necessarily need to order them online. And so I think Home Depot's got a lot of good future in that regard. I think they're going to be fine long term, you know. So they're one of those companies that I'm a little bit more likely to invest in on pullbacks. I think they pay good divvies too, right? Let me see. Yeah, so they pay $2.25 a quarter. in dividends. So, almost 3% annual dividend there. So, not bad. And when you consider that they could also appreciate over time, it's one of those dividend plays that I think makes sense. Yeah, I bought the dip in Salesforce. Yeah, so we bought Salesforce. Same concept. Again, they don't always work, right? So like these don't always work, but they work most of the time, I would say. Like we did this with Airbnb, we're green on it. We did it with Boeing, we're green on it. We did it with Baba, we're green on it. We did it with Chewy, we're green on it. We're waiting with CRM. We did it with Delta, we're green on it. We did it with Google, we're green on that one. We did it with Honeywell, we're green on that one. Coca-Cola, we're green on that one. MGM, we're flat, basically. We did it with Netflix, we're green. Waiting on Nike, we're in Nike, but we're red on that one. Roblox, we did it, we're green on that one. Shopify, we're still red, we're waiting on it. Snapchat, we did it with that. Although, again, some of these are mid-caps. We did it with SoFi and SoundHound. Those are mostly flat, but we are red on those. We did it with Target. Very green on that one. We bought Target at 140. It's at 147. It's almost 148. We did it with Tesla, where our average price in Tesla is 140. It's at 177. It's almost 180s. We did it with Tyson Foods. We're green on that one. We did it with Uber. We made money on that one as well, I think. We took some profit off already, though. But we did it with Walmart. We're green. We did it with Walgreens. Where's Walmart at? So, yeah, we've done this a lot, and it tends to work decent for me, at least. Do you think Celsius has a bright future ahead? I don't like Celsius as a company. I like them as a company. I think they're successful, and I think they've gotten really big over the last year. But I think there's also tons of risks and extension in Celsius, personally. If you look at Celsius's chart, again, I'm not telling you what to do. I have no idea what you should do. Do not copy me. This is just my own subjective bias. Don't copy me. I have no idea what's going to happen with Celsius. When I look at the long-term chart, and especially like a weekly chart, I know they've gotten really big really quickly, but I think percentage-wise, this is a little bit too crazy of a move, in all honesty, for me. I just think they're up too much. I think they're up too much, and I think historically, when you look at similar companies like this can fail. Bang Energy Drinks is a good example. Bang Energy Drinks was wildly big, grew really, really quickly, and failed very quickly as well. And so these have a lot of caffeine in them. They were well under $10 in 2020, and now they're almost $100 a share. I just think it's risky. I'm not telling you. I think it's risky, and it's up a lot short term. I think if we put up a yearly chart, they were at $40 a year ago, so they're up almost exactly 100% right now. They were up over 100%, and they've pulled back a lot. They're just too risky. They're up too much on the year. And again, let's take a look at their EPS. I could be wrong here. So here's Celsius EPS graph. So let's take a look at whether they've improved over the last year or not. They have improved. They've turned profitable. And again, they have grown a lot, and so they are churning profitable. The problem is whether they stay profitable. They went from losing 82 cents a share to losing 13 cents a share to gaining 13 cents. So their margins have gotten better. Let's see their revenue. All right. So, yeah, their revenue's got, again, maybe I'm wrong here with this one. I don't know. I'm not telling you to buy it. Personally, it's up too much for me. And I think it's just a little bit vulnerable of a position that it's up a ton short term, up over 100% or roughly 100% short term. That's a lot of risk. Sometimes they don't hold. And so because of that, even if I did like Celsius, I don't think now is necessarily the time to buy it. But again, that's just my own subjective way to look at it. So again, don't copy me. No idea what it's going to do. All right, chat. Looking at our votes here. Are you bullish or bearish on today's GDP data? 67% are bullish, 33% are bearish. All right, we got about 500 people here. We still got about an hour left before GDP data comes out. So again, we'll see what we get, chat. How are you guys doing so far this week? It is Thursday. Yeah, so Ryan Garcia said he'll step in for Tyson against Jake Paul if Tyson can't fight. Honestly, I kind of hope that happens too. All right. But yeah, there's Celsius. Looking at a video, looking at Tesla. Here's the Spire, the Q today. It's mostly neutral. It was more red, but it's kind of rebounded back up. Almost came back up, filled the gap a little bit. I don't know if GDP moves the market, maybe. I'm up 60% on Celsius. I'm banking on their international growth and Pepsi partnership to stay long. They dipped recently due to Nielsen data, which also happened in January, and they bounced back fine. Nice. Had a bad day yesterday, but made it back already today in some, so sitting all good. Yeah, I doubt Jake's gonna. I mean, I don't know. Jake is kind of a heavyweight right now, though. So Ryan is much smaller opponent than he is. All right, chat. Yeah. All right, guys. Hey, the Q's pushing up, breaking highs. Tesla at 177, 178.14. Tesla over 178s now, so Tesla's ripping up. Let's see if it holds. I've seen a lot of cool Cybertruck designs over the last couple weeks. They've got like an all chrome one. Tesla. Yeah, but I mean, you're always going to have cheaper stuff over there, Z. I don't think it's any. I don't think they're in trouble. With good GDP data, C3 AI could squeeze. Yeah, maybe. I mean, C3 had earnings yesterday. They are up from their earnings as well. If you look at this symbol AI, they are up. They're at 26.50 right now. Hit almost 27.50s in pre-market this morning. So C3 AI is up. It's a relatively new company, but yeah, well, no, the T1 rule is now into effect, Marco. So I'm assuming you mean interactive brokers. But yeah, the T1 rule is now in effect, which means that your cash settles in 1 day instead of 2 now. What's my dream car? I would say, like, it depends, you know. I've always liked McLarens. So maybe like a P1 McLaren. It's probably the coolest, one of the coolest cars, that I could get. If I could get any car, it'd probably be a Bugatti, of course. But I think McLarens are nice. I was always like a tuner person though, so I always like the new RSXs are really cool, or not the RSX, the new NSXs are really nice, the new ones. The Corvettes are cool, but I see too many of the new Corvettes because they're like $80K, right? So they're cheap sports cars. And so everybody's got them because they look like supercars, but they're cheap, so everybody wants to look like they have a supercar, and, you can get one for $80K, but they're just, they're too saturated. I see too many people driving them at this point, to be honest. The new Corvettes are cool, but like, again, I'm not trying to sound snobbish, but just too many people have them now. Tesla Plaids are cool. Cybertrucks are cool, I don't know about calling them my dream car, but they're cool cars. I don't know. It just depends. Classical dude. So what do you like, a 68 Mustang type of guy? Those are fun. Look, those are fun, but in terms of like I get being the classic car guy. They're like, some of them are cool. You gotta have the right motor in it though. All right, guys. What else we got? Is buying the Salesforce dip valid? Define valid. I know what it means. I'm just curious what you think it means. I mean, we don't know yet if it's gonna work or not. But any trading strategy can be valid depending on your risk tolerance. It just depends on, again, it just depends on what you think is gonna happen. I don't know. Again, I'm in CRM. We bought the dip. Small size. I'm not taking too much risk from it. Yeah, the 911 GT RS3s are fun. Super fast, super light. I don't know. When I look at, I'm looking at a mix of, will it turn heads as well as, speed. And I think McLaren gives you both of those. Can you explain if GDP is lower than expected or higher than expected, what's going to happen? I mean, nobody knows what's going to happen, number one. And it's certainly not like a given. Nobody really knows if numbers are going to, if market wants higher or lower numbers. Again, just to give you guys a little rundown on economics. All right, we do this at least a couple times every major economic report stream. So the Federal Reserve controls the economy. They try to keep the economy balanced. If we have too little spending and we're at risk for a recession and depression, the way they control this is by influencing interest rates. Now, the Federal Reserve can either straight up raise or lower interest rates, a hike or a cut. They could also do a more desperate measure called quantitative easing or quantitative tightening, depending on what the market needs, or what the economy needs, I should say. And so if we're at risk for a recession or depression, meaning too little spending is occurring, too little people are working and spending, the Fed will step in, and at first, they'll usually just straight up lower the short-term interest rates called the federal funds rate. The reason this stimulates spending is because when interest rates go down, people can spend more money on other things. If you're paying less money on a mortgage or an auto loan, you got more money to spend on other stuff. And so in that regard, it stimulates spending. And the Fed can also do a more desperate thing called quantitative easing, which means that they expand their balance sheet through bond purchases, and this allows banks to lower interest rates to consumers. All of these things are, the goal of this is to lower interest rates, a rate cut or quantitative easing. And they do this in periods where the economy is at risk. Think 2020 and the pandemic. They did this. They also sent out stimulus checks. But the consequences of bringing interest rates down that much is inflation. When people start spending more and more, inflation spikes. Businesses raise prices. And so one of the consequences of the 2020 QE and rate cuts was inflation. Inflation spiked up to over 9% in the following years. And, again, once inflation spikes, very rarely will it literally go down. The best we can do is slow it down. Right now, inflation is anywhere between like 2.5 or anywhere between like 3 and 3.5% if we're looking at CPI inflation. So inflation's not at a crazy high level relative to history, but prices have gone up so much in the last 4 years since the pandemic, from the QE that happened, from the lower interest rates that happened, that people spent so much money following those low interest rates that prices spiked up a lot. And again, once they go up, it's hard to get them to go back down again. And so looking in, and again, the Fed can also take the other side of that, where if inflation is out of control and inflation gets really, really bad, the Fed can step in, and again, they can do rate hikes. They can raise short-term interest rates. Eventually, it'll trickle into long-term rates, because if people are spending more money on mortgages and auto financing, they have less money to spend on other things. And so if you want to push spending down in this country, the Fed can raise interest rates to consumers, raise the federal funds rate, or again, do a more desperate thing called quantitative tightening. Now, QT, it's not direct QT usually, which is straight up just selling bonds, which is kind of like a much more desperate thing. Most of the time, it's what's called passive QT, which means that they just let their current bond holdings mature and run off. The Fed is talking about ending QT next month. They're slowing it down. They're ending QT potentially next month, and that's a dovish thing. That might bring interest rates down. The Fed has also raised interest rates a lot over the last few years, and over the last year or so, they've been pausing the federal funds rate. So they've been pausing the interest rates at the high levels where they're currently at, and they're doing this to try to discourage spending, because inflation, again, very rarely does inflation actually go down. The best we can do is slow it down, and so I don't think the country can necessarily handle more price spikes. And so in that regard, I think we should keep interest rates as high as we can for as long as we can, and make sure inflation truly gets under control first. And so I think the market does fear inflation, and I think it should fear inflation with how much prices have gone up since the chasing low interest rates in 2020 and beyond. I think prices have gone up a lot. Inflation spiked to 9.1% a couple years ago, and once inflation gets bad, it can really spiral out of control. And so the question is, with all of this economic stuff said and out the way, hopefully you get a better understanding of it. But the question is, what does the market want with GDP data? If the market fears inflation, it might be kind of opposite to convention, in which the market does not necessarily want high GDP. That might signal more inflation problems. The market might not necessarily want more people working. That might signal more inflation problems. And so it might be something, again, it's just a might. I don't know for sure. You never really know for sure. And regardless of what you think, the market can do anything for these reports. But yeah, the market might want lower GDP. It might want higher jobless claims. Both of those things signaling less economic growth. The market might also be back more true to convention and be fearing, when interest rates are high for extended periods of time, it's kind of like picking up pennies in front of a train track. Like, you can keep them high, but if you do it for too long, it can and has historically caused recessions. And so I don't think we're anywhere near that right now, but we can't keep them up there forever. So I hope, the point is, hopefully we get inflation under control soon. And again, I don't think it's terrible right now, but I think if we got it down to like 2.5%, it'd be better. And tomorrow we have PCE data, so PCE inflation, which is the Fed's preferred inflation metric. So that's basically what the way to look at it. Point is, I don't know. I don't know if the market wants more or less inflation, or more or less economic growth because of inflation fears, is the point. Uh, cars worth buying as an investment, old school classics, 1968, you know, Mustangs, specifically the high performance ones, Shelby Mustangs, stuff like that with low miles. I think if you buy those, you put them in a temperature controlled environment and you sit on them, they'll probably appreciate over time. Maybe not. You know, rare cars, twin turbo Toyota Supras with low miles from the 90s. I think you got a couple cars that'll, you know. Supercars, no, generally, because usually with supercars, there's going to be a cooler and better one coming out in the next few years. Like, I could buy a Lambo today, and in 10 years, that Lambo is going to be less cool. You know, it's going to be worth less. Versus, like, so it really needs to be like classics. Rare cars, classic cars, like that are really what you want to do with them. Yeah, all good, Blitz. All right, chat, we got 30 plus minutes left. We got about 600 people here now. GDP comes out in 30 minutes plus. Yeah, R34 Skyline. Super rare. Dude, I love Waffle House waffles. They're some of the greatest waffles ever. But every time I look on social media, I see like fights at Waffle House. You know. Now it's got me nervous to go to a freaking Waffle House. I love Waffle House. All right, guys. People are saying Tesla's in trouble. Truth is, yeah. I mean, again, it's just mostly bias. What's the annual depreciation rate on a car in the U.S.? Ooh, it's got to be high. I would say it's got to be pretty high. That makes perfect sense. Mortgage rates went from 3 to 7%. How does inflation affect the stocks you buy or sell? That's much more nuanced and less predictable. You know, like in theory, during periods of quantitative tightening in which the Fed's trying to push spending down, in theory, you know, you should, in theory, again, you should, in theory, have dips in the market because less people have money to spend in those situations, right? But because of the surge of AI and tech, the market's been breaking all-time highs pretty regularly for the last 3, 4, 5 months. And so, you know, that's just less predictable. The economy and the stock market are just different things that are kind of like different organisms almost, if that makes sense. Like they move differently with different catalysts and different news and different things. They're not always correlated. You know. All right, guys, we got GDP data, jobless claims data. We had some yeah, we got GDP data, jobless claims, unemployment filings, all that good stuff coming out live in about 30 minutes or so. About 30 minutes. Nvidia dipping down to the VWAP previous closing price levels. Is it time to buy this dip in markets? I think so. I got a trade of 8. I'm not telling you to buy anything. I have no idea whether you should or not. All right, we're scalping this move here. We already made a little bit. We're up $80. We got a cushion. We'll try to hold the rest flat. Up a little bit. We're day trading an Apex funded account program. There we go. All right, so we're up $105 on our funded account today. We got a nice little cushion. Nice little cushion on Apex. Yeah, so jobless claims, chat, are expected at 218. GDP data. Now, this is the second revision. So, again, to put this into perspective revision-wise for data here, chat. So, to put this into perspective revision-wise for data, where did mine go? So, yeah, so today's data is the second estimate for the first quarter of 2024 GDP. It's based on more complete data compared to the initial or advanced estimate, but it's still not the final one. Next time will be the final estimate. It's going to be released later on next month, June 27th. June 27th. So again, the final estimate for GDP data is going to come out June 27th, 2024. All right, so looking at NVIDIA right at the 200 EMA VWAP. All right. AI is such a helpful thing, man. It's such a powerful thing. Tesla pulling back. All right, so yeah, GDP third estimate, quarter one is going to be June 27th. PCE data is going to be June 28th. Next month. What is KSS? Kohl's? Yeah, I mean, Kohl's is going to fail. Like, again, these are one of these companies that, in my opinion, is a retail store that's prone to fail. Now, they do have a website, but, you know, I think a lot of the stuff people just buy online now. You don't need, you know, yeah, so I think this is one of those retail stores that's going to fail over time, most likely. But again, honestly, the yearly chart doesn't look bad. So maybe I'm wrong. I could certainly be wrong. It's just Kohl's has been downtrending since 2018. Understandably so. That's when Amazon started really picking up. Yeah, I'm in Palantir. I haven't looked at it this morning, though. Is it doing well? Yeah, so Palantir gapping up. I'm still green on it. We've been green on it. Yeah, well, groceries are different, but even groceries you can order online now. Grocery stores are still going to dominate that market, but what you're going to see is you're going to see pickup. Like, people are going to, shopping is going to decrease, and ordering groceries online and then just walking through and picking them up is going to increase. You know. Why do people ask you what to buy? Shouldn't be trading or investing if you need to ask people that question. Yeah, I mean, I think they just need to rephrase the question. I think most of the time it's, hey, should I buy this? Or, hey, should I buy this? I think a better question is what your outlook is for X company. You know, do you like ABC company? Do you dislike ABC company? What's your outlook for ABC company? I think that's a more reasonable question. I'm never going to tell somebody, yes, buy it, or no, don't buy it. I like certain stocks and I dislike certain stocks, but again, I always try to preface it with, I have no idea what's going to happen with said stocks. Genuinely no idea. Yeah, I mean, JCPenney, Kohl's, Macy's, they're all pretty much destined to fail over time, I think. Nobody goes there anymore. And I don't know, I thought this, but when I look at Macy's, it's still got a lot of people there, especially during the holidays, so maybe I'm wrong, you know. Yeah. Dillard's, man, I haven't been in a Dillard's in a long time. You think gold is tanking? No, not really. I mean, I think it's down a little bit from highs, but I think the long-term trend is certainly on the upside. You know. Yeah, I'm looking at gold. We'll see. Again, we still got almost 20 minutes left until this data comes out. Pensions? I mean, I'm not really a big pensions guy, brother. What's up with AMC? I don't know, bro. AMC's down today. So is GameStop. They're both down. You know. We'll see what happens. No idea what they're gonna do. Hopefully they go up, but who knows? All right, guys. Are you buying up anything ahead of GDP data? I'm not. I'm not one of those people that like buying up anything ahead of this data release. All right, so look at Tesla up to 179s now. Again, we talked about NVIDIA bouncing, and we bounced directly off of this level. Look at the 200 EMA. Again, if you're not watching the 200 EMA volume weighted average price, you're missing out on a big major level. Yeah, Salesforce is down big. I'm still in it right now. Whoa. Okay, we're basically completely flat. What's the market fearing, bro? Recession or inflation? I don't know. I know it's definitely at least fearing inflation a certain amount. Definitely at least fearing inflation a certain amount. I use the 200 EMA and the volume weighted average price. That's the level that you can see on the chart right there. Look at Tesla rip. Breaking highs here. How do we trade the incoming GDP data? I'm just going to personally wait. I'm not really going to take any major crazy big positions with GDP data. I think that's just too risky, in all honesty. Also, guys, again, if you want to help support your boy here, check out Apex. Apex's sale ends today, guys. It ends today in 15 hours. The 90% off in one-day pass sale ends, chat. It ends today. 15 hours, guys. again, for the time being, you get 90% off 1-day pass, which means if you, again, let me put this into perspective. I always kind of do the same thing when I plug a sponsor. But number one, they're a sponsor of mine. They pay me money. Okay, I'm going to preface everything I say with that understanding. Confirm everything with them. I'm not an investment professional. I'm not liable if you lose money. Understand CFTC 4.41. I might be wildly wrong about anything I say. I do trade off stream, all that good stuff. Basically, I'm not even claiming to be a good trader. They're a sponsor of mine. I'm biased. With that said and out the way, though, if you want to day trade, do not put up thousands of dollars yourself. You're almost certainly going to lose that, in my opinion. It makes much more sense instead to try a funded account program. If you put up $5K in the beginning, you're probably about to lose $5K. Most day traders lose their first few accounts, and anybody that's being honest with you and that's not trying to sell you a course or a mentorship program is going to tell you that truth, which is that you're probably going to lose your first account day trading, probably going to lose your first few accounts. And so does it make any sense to put up $5K yourself? Absolutely not. A funded account program like this is a perfect middle ground of pressure. Instead of risking thousands, for the time being, you can try the 250K challenge, which means if you pass it, they're going to give you a demo of 250K. If you can hit their profit target without hitting their max loss, with the 250K account, you got to make 15K in profit without losing 6,500. A 2-to-1 ratio. If you can do that, they fund you 250K with a 90% split. And so the 90% split, similar to putting the money up yourself, there's only a 10% difference there. But if you lose, for the time being, this 90% off, this is about $18. Like if you use my coupon code BT, you can get this one for $18. Very, very cheap. If you want a better ratio, the cheaper ones have a little bit better ratios. The 25K one, where they give you a 25K demo, if you can make 1,500 without losing 1,500 and following their rules, it's like $25-$30 right now if you use my link. Very cheap, 1-to-1 ratio here. And you'll notice all of these include real-time data. The value is there. If you wanted to buy real-time data independent of this, it's going to cost about the same amount. So the value is there. It's a perfect middle ground of pressure where if you lose, you're out $16, you're out $25, you're out $30. It's not the end of the world, but if you pass it, you still keep 90% anyway. It's a perfect middle ground of pressure. And in the futures market, you can day trade the S&P, you can day trade the NASDAQ, you can day trade a lot of things that move very similar to stocks. You can't day trade stocks directly, but you can day trade index funds full of stocks, and it's just a great way to learn how to day trade with limited risk. They are a sponsor of mine. I'm biased. Check them out. Here's the link. Use coupon code BT if you want to get the max discount. We got 9 minutes, chat. 9 minutes. All right. The trader funded program. Who's the trader funded program? I don't know if I've ever used them. Yeah, again, I don't know if I've ever used the trader funded program or anything like that. What if the rate comes in high? What does it mean? So yeah, so if GDP data comes in high, it depends on what the market fears. If the market fears inflation, it might not want high GDP data. If the market fears inflation, it might want lower GDP data, more jobless claims, which is both of those things signal less economic growth. Jobless claims numbers is how many people are filing for unemployment data week to week. And so in that regard, yeah, it might want less economic growth. Less economic growth. All right, chat. Jobless claims, unemployment filings, GDP data going live. We got 7 minutes left. 7 minutes left. You can see the timer on the top right. A lady's claiming her dog is a vegetarian. How dare you? Okay, listen. You can't take a carnivore and put human values on a carnivore, okay? It's a terrible idea. What a ridiculous statement. You know, the problem is this, right? Even with vegetarians, I'm not against you if you want to be a vegan or a vegetarian. Do your thing. Live your life, all right? I believe in personal choice. As long as it's not hurting anybody else, fine. But the problem is that if you took those same vegans and vegetarians and you didn't feed them for a week, bro, they would be loving meat. Their whole mentality would change. Like, the thought of being a vegan or being a vegetarian is a luxury of being well-fed. It's a luxury of being well-fed. Naturally, for humans, I don't know. I think it could go either way. I think natural human diet is arguable for sure. But yeah, the circle of life is all I'm going to say. Anyways, 6 minutes left, chat. 6 minutes. We got about 1,000 people here live. Yeah, today we got GDP data, jobless claims, unemployment filings, and yeah, we got GDP, jobless claims, unemployment filings. Just to confirm, is that any size account? Yeah, I mean, listen, Alex, if I mistook you for being a hater, my bad. Maybe I was wrong. You know, again, all I'll say is that when you run a channel for this long, you got to be very swift with banning people. You know, you got to understand, I've had stalkers, genuinely had stalkers. I have had haters that, again, my guess is I know them in real life. Maybe they're not where they want to be in life, and they know me and they see me on YouTube or whatever, and so they're just kind of super insecure, creating fake accounts, doing their own thing. When you get people like that kind of like stalk you and harass you, you just got to ban them. You learn to ban people quickly, you know. And so, you know, if that's you, my bad. It's all good. But time will tell. DKS Sports, I don't know, man. I think they're pretty big. You know, I've been in, you know, they've got a lot of cool stuff there. All right, chat, we got 5 minutes. So how does the trading app work? So with some, like if you go Rhythmic, it's a software. You can download NinjaTrader, you can download Quant Tower, which is what I use. And again, that's a software. If you want a web-based platform where you just go to a website and trade on a platform online, then you use Tradeovate. So it depends on which one you want. Yes, I bought Salesforce. I'm in Salesforce right now. I tune in for every major economic announcement. Love what you do, man. Thanks so much. Hey, thanks, brother. I appreciate it. Yeah, man, that's exactly what I've always stuck to my faceless channel. Yeah, man. It is what it is, bro. You know, I take it, I kind of take it as a compliment. I say, man, if I'm making them hella insecure, if they're harassing me, creating fake accounts just to try to, you know, again, it's a net positive for me anyway, like running this channel. It's not like it's ever going to discourage me from doing this. You know, and it just means that, hey, you know, I'm out here making people insecure. You love to see it. Anyway, SPY moving up. Again, we got 3.5 minutes, chat. 3.5 minutes. I'm going to throw this bad boy in sub-only mode so that you have to subscribe. So hit the subscribe button, hit the notification bell. I appreciate it. Yeah, I'm certainly not telling you what to do with Salesforce. I don't know. My logic is it's down 10 to 15% short term. Usually they bounce back a little bit, but not always. It's certainly, I would say probabilities wise though, it's pretty good. I'm not bearish or bullish on the news at all. I'm neutral. I don't know what it's going to do. All right, guys, we got 3 minutes left, chat. 3 minutes. All right, be ready. All right, here we go. 2.5 minutes. It's the final countdown. All right. I know. I'm hilarious, guys. I know. Don't tell me. All right, guys, we got 2 minutes. Again, expectations for GDP, 1.2%. This is what's called the second revision GDP numbers, which means that it's the second revision from the original estimates. It's not the final estimates with all the data. It's more updated data. called the second revision. Jobless claims, and that's expected at 1.2 for GDP second revision data. Jobless claims are expected at 218,000. And again, the higher number for jobless claims means the less economic growth, the more people filing for unemployment. And so it's debatable on what the market wants in that regard as well, whether they want higher jobless claims and less economic growth, or whether they want more true to convention, lower jobless claims, lower unemployment. And so I'm not sure what the market wants here, Chad. We got a minute and a half left. Yeah, C3 AI had earnings yesterday. They're gapping up a lot. Nvidia has churned up a lot over the last few weeks after earnings, a month ago or whatever it was. Yeah, here we go. All right, Chad. GDP data. You guys ready? GDP data live. All right, guys, we got a couple minutes left. Here, we got 30 seconds, chat. 30 seconds. This timer is a little bit late, but we're actually on point. All right, guys. Again, 30 seconds. Give me your last minute predictions out in chat right now. Last minute predictions out. $20 seconds, chat. 20 seconds. It is Thursday. 10 seconds. Hit the live button next to the play button. Make sure you're fully caught up on stream here, chat. Do it now. 5 seconds. And here we go. Here's the report. Ding, ding, ding. There's the report. We got the Q on the left side here. Again, the timer's a little bit early. Jobless claims. GDP showed up at 1.3%. 1.3%. 1.3% quarter over quarter GDP data. Jobless claims showed up higher than expected. Both of these signaling less economic growth. And let's see what the market wants. And the market does react initially positive to it. It doesn't mean it's going to hold. But again, jobless claims 219,000. GDP data 1.3%. So again, jobless claims showed up at 219,000, so higher than expected jobless claims, signaling less economic growth, but ultimately less inflation fears and problems, right? That's the way you have to look at this. That's probably why the initial reaction is positive here, is because it signals less economic growth, which might mean what the market wants. Again, GDP data showed up at 1.3%. 1.3%. I'm seeing initial estimates vary, but I was showing initial estimates at 1.2%. So in that regard is a little bit higher, but still market so far on higher jobless claims numbers and lower GDP numbers is reacting positively here. We are bouncing up on this data report. We got about 1,600 people watching live. And again, we'll put this up on screen here, chat. Again, 1.3 versus 1.3, kind of initially flat GDP data. Again, this is the second estimate. Jobless claims showed up at 219,000. And then remember, tomorrow's PCE data, the bigger report is tomorrow. PCE inflation data drops tomorrow, chat. So be ready, because that's a big report, a big release. Again, market probably going up now because it wants less economic growth versus economic growth. It doesn't want that as much. It wants less economic growth, and ultimately less spending is what I think it wants. Yeah. And so again, we're pumping up to 455s in the market. Let's see if we can go green on the day. GDP data is having a positive effect. There's Nvidia. There's Tesla on the right. We'll put gold up instead of Tesla here. Let's put gold up, see what gold's doing here. Gold moving up a little bit on this GDP report. Q just broke highs as well. Nvidia testing highs up there. Gold moving up as well. So again, the question now, let me see, is do you think the market likes or dislikes this report? So far, it's definitely had a positive reaction here, but sometimes the first move is the wrong move. I'm confused. Is this data good or bad? As we said many times, it's more nuanced than just a binary good or bad outcome. This report showed less economic growth. So optimism towards inflation, but a more bearish outlook towards recession fears, you know? So again, more recession fears, but less inflation fears is what this data showed, and it depends on what the market fears. It seems like the market's fearing inflation much more than any recession fears. So that's what it looks like to me. And again, if you want to check out my sponsor chat, tomorrow is PCE data. We're going to stick around and day trade these this volatility. So again, stick around here. We're already up over $100 day trading. We're going to do it some more. But again, if you haven't already, hit the subscribe button, hit the notification bell. Help me hit 140,000 subscribers. We're almost there. I'm pretty sure we're almost there. We're basically there right now. Yeah. Again, hit the subscribe button. We need like 125 subs left to hit 140,000 subscribers. Chat, do it now. Hit the subscribe button. Do it now. And again, if you haven't already checked out my sponsor, check out Apex. Apex is a funded account program. If you want to day trade this with me, try the futures market out before you try to day trade stocks. In the futures market, there's no PDT rule. You can day trade, short, buy market, sell market, very similar to day trading stocks. You can't trade individual stocks, but you can day trade index funds like the S&P, the NASDAQ, basically with the SPY and Q track, very similar to blue chip day trading patterns, but there's no PDT restrictions, and these funded account programs allow you to get started for a much smaller investment. On Apex, they give you a demo in futures, and they test your skill. If you can hit their profit target without hitting their max loss, they fund you the same amount. The base one's $25K. You got to make $1,500 without losing $1,500. Real-time data is included, which makes it a ridiculously good discount in value. This is like $25 a month right now. If you use my link, you get $25K in funding. If you pass it if you lose, you're only out $25 roughly, but if you pass it, you get a 90% split. The sale for the 250K challenge, you can get the 250K challenge for $16 right now for the next 15 hours. Again, it ends in 15 hours, where if you pass this one, you get 250K in funding with a 90% split, and if you make 20K in that account, once you're funded, you keep 18 of that. You also get to keep your first 25K in profit as well. You can see the 90% off deal ends in 15 hours. Use coupon code BT. They are a sponsor. I'm biased. They pay me money. Most day traders lose money, but it's a lot cheaper to lose on Apex than it is to put up 5K yourself and probably lose that, which is what most people are going to do. And any real day trader will tell you that's the truth. But if you want to check it out, here's the link. Great way to test your skill with limited risk, but still some pressure. You're still risking something. But yeah, check it out right there. Bitcoin again. What is Bitcoin doing on this stuff? So gold is pumping up a little bit. Bitcoin is at 68,000. SPY is gapping up still. SPY is still technically green though. So not really gapping up, but SPY is up a little bit. Yeah, I would restart. Yeah, we made a little bit of money on Trade-Evade. All right, so there's the market turning here a little bit, or at least Nvidia's starting to turn. Yeah, you can see we're up about $100 today on Trade-Evade, day trading this. Nvidia's starting to turn though. That looks weak. I'm gonna try shorting this. It's kind of a risky endeavor here, but we've got a cushion that we can play with. I'm gonna add one contract to it. All right, one contract. We're basically flat on this position now. We got two contracts fully, and you can see how similar this is to day trading stocks. We're almost flat. We're shorting the market. All right, there we go. We're green. We're gonna take half off. All right, so we're up $150. So we just day traded that. We made 150 on the day now. Very quick little scalp though. We're basically trading the QQQ price action on Apex on Trade-Evade. Yeah, the challenge is $16 for the first month. I think it goes up to $30 after the first month. But in theory, you should be able to pass or fail the challenge. Yes, it does say that, Hank. But at checkout, if you use coupon code BT, like BT, 2 letters, beginner trading BT, you'll get it'll show up. It'll be $16 or whatever it is before tax. After tax is like $18. All right, so again, we scalped a little bit here. We're gonna see if we can keep trading. PCE data tomorrow, guys. Big data release. But the GDP data is out. Will the market hold these gains? We're gonna end this poll right now. We got about 1,000 votes. A little bit more than 1,000 votes. 65% are bullish on the GDP data. 35% are bearish. I think a good poll today. Look, you can see the results of that poll. Yeah, it's the same chart as the SPY. It's the same price action. If I pull up the E-mini and futures here on the middle chart, and then I look at the Q, or here, that's the, if I pull up the NASDAQ chart in futures and I pull up the QQQ, this is the same price action. If I zoom in here, you'll notice it's virtually the same thing. There's slight differences, but it's basically the same thing, like luck. And I can day trade this one on futures on Apex, this middle one, no PDT rule. You know, basically the same thing. You don't need 25K like you do in stocks. In stocks, you need 25K with a margin account, which is ridiculous to do so freely, to be able to day trade it freely. We're going to do another poll, and the poll is going to be, does the SPY close green today after... Does SPY close green after today's GDP and jobless claims report? Yes or no? All right. So again, vote on that poll. Let me know if you guys think the market's going to go green after these reports. Again, hit that subscribe button, guys. We got about 139.9 thousand. We need like 100 subs. We got over 1,000 people here. Now, I know most of you guys are subscribed already, but yeah. Scammers. All right, we made a little bit today. Just go to the facts section. AZ said, what are the loss limitations once you get funded? Again, most day traders are going to lose, you know. As long as you're understanding about that, most day traders lose. Once you're funded, there is a max loss, so you're not just going to be able to YOLO the account. That's not a reasonable expectation either, especially for something that's anywhere between 20 and 40 bucks. But if you follow their rules, you know, you can build up profit once you're funded, you know. On this 50K current account, on this account right here, I'm up 4 figures so far. You know, kind of continuing to churn up our profit, but in this account, we're up 4 figures. So hopefully we'll continue grinding that up. And I think the best thing about these funded account programs is that they just simply build your skill. They teach you how to trade with less risk. You know, most day traders are still going to lose, you know, and I think that's where you get some haters for these things, because day traders try it, they lose. You know, if a losing day trader is usually emotional as well, so like it's hard to be introspective and say, hey, I took some dumb trades. Instead, they blame, you know, the platform, they blame me, they blame whomever, but most day traders lose money. You know, this is just the truth. I'm not even claiming to be a good day trader either. Like, most of my skill is in swing trading and investing. Was that an alarm on the song or my house? Is that my house alarm going off? Do you think we're going to go into a recession when these hundreds of restaurants close? I mean, no, not necessarily. I don't know. I think it depends on a lot of different stuff. All right, guys. So, I only day traded with NVIDIA and Taiwan Semiconductors. Hey, well, good luck, brother. Why do you think restaurants are closing, Larry? Do you think that's true? Again, I think right now the risks to the economy are not recession risks. I think right now the risks to the economy are inflation risks. I think prices have gone up so much in the last 5 years from too much spending, from quantitative easing that happened in 2020, in which inflation spiked. Prices don't go back down usually. So I think people are still learning to deal with those high prices that are probably not going to go back down, and time's going to have to heal those wounds a little bit. But I think right now, inflation is the risk. Inflation is the problem. Inflation is the worry. Unemployment's still relatively low. You hear people say stagflation, but I think unemployment is still relatively low. And I think GDP is still growing to a certain extent. You know, even 1.2, 1.3% is still GDP growth. To be in a recession, we'd have to have 2 consecutive losing GDP quarters to be technically considered a recession. And that's not even including unemployment, being under 4% for a long time now. So yeah, I don't think the risks right now are inflation. I think a lot of people that are really, it's also an election year, but I think people get really biased politically. And so I think a lot of people are like, yeah, we're in a recession. They changed the definition and they say all these different stuff, but we're not in a recession right now. If anything, the risks to the economy are the opposite of a recession, which is too much spending has occurred and inflation spiking is a much bigger risk than us hitting a recession right now. And sometimes when I say this, I think people, I think the truth hurts sometimes. And so if you've been wrapped up in politics or whatever, this might rub you the wrong way. And that's all right. Listen, I'm very neutral politically, but I just think that we're not in a recession right now. And I think claiming we are is misleading. And I'm not saying we're not going to hit one into the future. Maybe we do. But yeah, some of the characteristics of a recession are generally not under 4% unemployment, A lot of restaurants are closing because of the business model that Red Lobster went. Company bought Red Lobster, sold the property to another company, and had Red Lobster then lease it from them. Yeah, I mean, that's interesting. But I think there's still obviously successful restaurants. Yeah, but that was years ago, Survivor. That's not now. Again, these are just political buzzwords. And that's what I'm saying, is that people get so biased politically. Like, again, you have to understand, outside of any political bias, I don't care about either side, right? I dislike both sides. I don't care about any of them, to be honest. I'm very neutral politically, and I'm very middle ground, to be honest, right? But people just kind of regurgitate these buzzwords like, oh, they changed the definition, and all these different things. Like, listen, the news's job is to get you the most upset, especially like if you swing towards one specific side, whichever side is in power. The other side during an election year is going to try to make you think it is the worst it could ever be right now. This is very consistent historically as well. It's the worst it could ever be right now. That's generally not true. I'm not saying either side is good or bad, but that's generally not true. Things have been much worse. In the 80s, inflation was 18% at some points. 18%. And so you got to understand history of these things and understand that, you got to understand where people are trying to pull you in different directions. And just, we're not in a recession right now. A recession means 2 consecutive losing GDP quarters. It's typically characterized as high unemployment, nobody working, nobody spending money in GDP losses, right? That's the characteristics of a recession, and we just don't have that right now. That's not what we're in. GDP is growing. Even if you don't like how much it's growing, GDP is still growing. Unemployment's still low, under 4%. Now, regardless of why it is like it is, that's a different argument, a different topic. The PDT rule states that you can't day trade more than 3 times per rolling 5-day period if you have less than $25,000 in a margin account, is what the PDT rule states. Yeah, I'm not saying things are great right now. I'm not saying everything's all rosy. I'm really not, because things aren't. Again, the problem right now, problem right now is not a recession. The problem right now is too much spending has occurred over the last 5 years because of quantitative easing in 2020, and prices have spiked so much and they're hard to get to go back down. And so people are struggling right now, not from being out of work, which would be characterized by a recession. People are struggling right now because of prices being too freaking high. And that's the opposite of a recession. That means too much spending has occurred and businesses have raised prices too much to where it's not sustainable. And so because of that, again, I think we need to keep interest rates really high for as long as we can to really combat inflation. And tomorrow's PCE inflation report will give us a big understanding of this as well. Cali passed a $20 an hour minimum wage law, and restaurants are closing and downsizing big. Yeah, I mean, that's of course going to happen, though. $20 an hour is crazy, though. I mean, it really is crazy. I'm not saying it's not something we should happen, but it's certainly it's not going to be sustainable for a lot of businesses, And so that's the natural consequences, that the businesses are not going to, it's going to strengthen the big chains, and it's going to weaken the regular, independent restaurants, the ones that aren't franchises and stuff like that. Yeah, you can trade futures on TOS. Yeah, I mean, you could use a cash account. You can't short. You still got to wait a day for your funds to settle. And so if I spend $5,000 in equity on a cash account, I can only day trade once a day, basically, with it. So now instead of 3 times a day, you could trade basically 5 times a day. But you can only go long. You're still severely restricted, in all honesty. There's still a better reason to use futures. You could scale in. You could scale out. You could do a lot more stuff. It just makes more sense. I mean, $20 an hour is certainly livable. The problem is that people live above their means. $20 an hour, say you work 8 hours a day, is $160 a day. 5 days a week. Let's say 5 to 6 times a week. That's $880 a week times 4.3 weeks in a month. That's $4K a month times 12. It's about $50,000 a year. In California, listen. Obviously that's not a lot, but people got to live within their means if they want to live in Cali. I think there's a luxury tax to live in California. I think if you want to live in California, you're going to have to spend more money, and you're going to, if you want to live there and you don't make that much, you're either going to have to move or you're going to have to lower your standard of living, which I know is much easier said than done. Again, it's a tricky thing, but that's just the reality of things right now, I think. Yeah, and again, minimum wage jobs are not supposed to be careers, right? 100%. Like fast food jobs are mostly meant for young people, but it's certainly nuanced. And I know look, I'm not here to judge anybody's situation. I get it. I'm for people. Listen, if minimum wage would have followed inflation, and minimum wage would have followed the gold standard, really is then it should still be higher, right? But there's a lot of reasons it's not, and it's super nuanced. Anyway, the problem is that everyone needs a job. If a job can't support someone's life, then it's a problem. I don't think that's definitively always true, though. I think there's some jobs that are not meant to support a family on, right? I think there's some jobs that are meant for teenagers that live at home, to have, right? And I think there's a difference between those jobs, which are minimum wage jobs, and careers, and I think people need to, I know it's not always feasible, though, and so it's super tricky. I'm not here to judge. I get it. I get it. It's not always feasible. Sometimes you just get in a rough spot, and, you're stuck. And if you quit, you don't have money to pay bills on, And yeah, and if you stay there, you're not making much. So I know it's a tricky situation. I'm not here to judge. I get it. I make $20 an hour and I'm under 40K, so that math is incorrect. Well, I mean, this doesn't include taxes, Ethan. So if we take taxes out, what are taxes? 20%. It's gonna be about 36K or so. Depending on how much taxes are in Cali. I'm sure taxes are a little bit more, so it depends on where you live. But yeah, taxes, take it out. Let's take 20% of that off. It's about 36K or so. It just depends, right? Yeah, inflation has wrecked a lot of things. Again, inflation has wrecked a lot of the market over the last 5 years. It's one of the reasons I think we got to keep prices, or we got to keep interest rates high, because if we don't, it's only going to get worse and worse and worse and worse, right? So we have to keep interest rates high and really discourage spending in that way, because if we don't, it's just going to keep getting worse and more of a problem. And I don't think that's necessarily sustainable right now. I think we need to control inflation. If we don't, then again, real estate agents, mortgage brokers, people involved in real estate are going to scream, "Oh, lower rates! It's time to cut rates! It's time to cut rates!" It's not. It's not. Inflation. What was last CPI report? The last CPI report showed 3.4%. Still a little high. Like good inflation. If we look at like a CPI graph, right? How do you like my old music? This is my old music that I've had for years. But yeah, if we look at CPI, right? Number one, let's go ahead and look at everything. So again, Fed stepped in, did QE in 2020. This brought interest rates down for consumers and stimulated spending, and they also sent out stimulus checks. And so the consequence of high spending is inflation. So you can see starting in April of 2020, massive spikes, almost to 10% inflation, and so, but where we are now isn't the worst it could ever be. Like, we're here. So if you draw a line based off of where we're at now, historically, like, we're higher than, I would say, what is average. I would say average over the last few years is about 2.5%, right around here. So we want inflation to drop down to this level, if anything. But again, another thing that I always try to show people here is that prices have gone up a lot in the last 5 years, 4 years since 2020. Like, you can see how much inflation has spiked. But you can look at this chart of CPI inflation. Look at how many times prices have actually gone down. I'm not talking about slowing inflation down. I'm talking about look at how much prices have actually gone down. And you can kind of see one instance of it here, a very slight decrease in prices here, and that's it. So 2 times in the last 20 years have prices actually gone down. And so, in that regard, inflation should be our number one goal. We can't handle more price spikes, because then people are really going to be upset. People are already upset now, to where people that don't understand economics think we're in a recession because prices are so freaking high. But we're not in a recession. We're in the opposite of a recession, which is too much inflation. And again, I hope that makes sense. Like, we need to control inflation first, and that's the reason the Fed has raised the federal funds rate, raised short-term interest rates. That's the reason they were doing quantitative tightening. So I hope that all makes sense. Okay. All right, sorry, we're back. Upon this upcoming report, I think we'll rock the market today. Tomorrow? I think you mean? What upcoming report? Those are the jobs that are available. To say that they are meant for young people so they don't deserve a living wage is entitled talk. Pick yourself up from your bootstraps. Yeah, but okay, so P on the other end of that, right? Again, there's certain jobs that are obviously meant for young people and they're not meant to support a family, right? That's obviously true. Again, I'm with you. I think people should be paid a livable wage, right? But you also have to understand the consequence economically from this, okay? And the consequence is that businesses are going to fail. Businesses are going to close, and then nobody's going to have jobs. And so, you have to look at both sides. You can't just... I would love for there to be... I'd love for people to get paid more, but there's a balance that needs to be there. If you do it too much, again, it's gonna be counterproductive to what you actually want, which is more people working. If you do it too much, there's gonna be less people working because businesses are gonna fail, and I think that's a very self-evident thing, So again, I get it, but again, I'm not picking sides here. I want people to get paid more. I don't want price or minimum wage to go up so much to where businesses fail as well. So I think there's a balancing act that needs to be there. I certainly don't think, I'm in Texas, minimum wage is like $7 and something. I certainly don't think it should be that. I certainly don't think it should be that. I think it should be much higher than that. But once you start to go 20 plus, it starts to get really risky. Yeah, no, I feel you guys about young people. No, I get it. All right, guys. Q pulling back to the VWAP here. NASDAQ pulling up. It's at 18.76. And again, when I tell people the argument about why businesses fail if it gets raised too high, nobody really has a response to that. They just say, raise it, raise it, raise it. But then when we talk about that, it's just kind of like silence. It's like, okay, so they understand what I'm saying. It's just not convenient, And I get it. It's tough. Like most things in life, it's somewhere in the middle. Like most truths in life, it's somewhere in the middle. All right, so Salesforce is down. We are down on this position, but we're down not that much. I still want to give it a chance to bounce. And again, it's all love here, guys. Again, this is something that's super nuanced. And again, it's something that everybody should understand both sides, right? I'm not saying anybody's right or wrong. I'm just giving both of the different arguments. And, it should never get you upset at me or anybody, because I'm not upset if you disagree. It's all good here. Again, I believe, certainly, I live in Texas. I believe the minimum wage here should be higher, for sure. But yeah. I also think with the influx of technology growth, businesses are just going to automate things, and I think that's very clear as well. So I think there's a lot of talking points there about that type of stuff, because again, tech is getting to that point where they can automate people's jobs very easily as well. So it's a weird future that we're looking at, guys. It's a weird future. All right, guys, SPY is mostly flat, but green. Here's the previous closing price. So let me ask the chat here. Do you think the SPY closes above this level? We did a poll already, which basically asked the same thing. But I guess, do you think the SPY breaks above this level in the first hour after the opening bell? Is a good question. Do you think the SPY breaks that level after the first, at the open, basically? Yeah, it's all good. No? Yeah, again, we're in CRM, but CRM's starting to fight its way back. Dipped a lot from earnings. I'm usually there to buy this dip up, but we'll have to wait. Fed will keep rates high until something breaks, banks fail, unemployment. Maybe. I think they should keep things high, you know. So I'm watching this video of the lady at the first iPhone. When the iPhone just came out 17 years ago, she bought the guy's spot in line for $800. She basically went up to the guy at the number one spot in line that had been waiting for 12 hours. And she was like, yo, I'll buy your spot in line for $800. And the kid at the time, Mark R., he's actually kind of like semi-internet famous now, but he was like, sure, $800, fine, right? She wanted to flip phones, so she wanted to go in and buy a bunch. Honestly, I question how smart this lady really was, right? Like, she's out there flashing stacks of cash and giving this dude $800, but she didn't consider that they might not sell you as much as you want. They're not going to sell you as much as you want. They might, so she rolled in like they would just sell her 10 iPhones that she was going to resell and make money on. But they were like, nope, we're limiting it to one phone a person. So she basically gave $800 away for nothing. And that kid got a free iPhone, basically. So, yeah, it just, funny video that I watch every now and then when I see it on the internet. Mark Zuckerberg. It's not Mark Z. His name's Mark, I think, Robalier or something like that. I can't pronounce it. Yeah, she should have. If she was smart, she would have figured that out beforehand, And that's what I'm saying. Like, I think she's just kind of pompous about it. Like, she was obnoxious about it, I think. Acting like she was just going to get rich and she got all her stacks of cash. And then she walked up and was just kind of like, oh, never mind, I guess. Anybody that was smart would have asked beforehand. Although, to be fair, maybe the standard was different back then. Maybe she assumed she'd just be able to buy whatever. We do have, I think, new home sales coming out. New home sales dropping today. Nothing big, but still something. All right, GeForce Summer RTX Core prize pool for NVIDIA. NVIDIA's giving away some stuff. Let's see if we break that previous closing price. We got about 23 minutes until the open. No, she has the right idea. She had the right idea, but like, again, I question how smart she is, because I think if you're gonna spend that type of money to skip the line, you better go up to Apple first and be like, yo, am I gonna be able, like, is there a limit to how many I can buy? That's step number one. And she made that the last step. It was her mistake. You know, she should have figured that out way before she did. Definitely way before putting up money for it. And so maybe greed overpowers logic sometimes. But yeah. Yeah, the Cybertruck still has that clause. It might be all Teslas, but I might be wrong there. Yeah, Apple said that well beforehand, though. Right, like, I don't know what, you know. Yeah, and then the kid who did it was just kind of like, all right, lady, sure. Like, look at this kid. Look at this kid. You know, this kid's like, sure, lady, I'll sell you your stuff. Like, you want to give me $800 for my spot in line? Okay. You know, and honestly, he made out really well. He got a free phone. Basically, she paid for his phone. And he still got his phone that day too, so it's not like he had to wait that long. Like, the line moved quickly, and you know, he still got his phone that day. Yeah, again, that's what you gotta do, different people. But if it was that easy to do, you know, the way you do it is say, hey, I'll give you $20 each if you wait in line and get this phone today. You know, that's one of the ways to do it. But yeah. Q back where it was before the GDP report came out. Yeah, I see the Q pull back. We're basically flat on this GDP report. Here's the NASDAQ in the middle. Again, Salesforce still dumping down a little bit, but if we look at like gold's still green on the day. Tesla, Nvidia's still fighting its way back up. Again, we're pretty much flat right now. The NASDAQ's at the 200 EMA. Still got about 700 people here live chat. So if you haven't already, subscribe, hit the notification bell. I appreciate it. Tesla expands globally. Yeah, so FSD is going to be implemented overseas is the big news today. That's what initially popped Tesla up. If you look at Tesla right here, again, they did have some news that came out today. They're still green on the day. If you look at the news, it's this news right here. Tesla's prepping FSD autonomous driving overseas, according to sources by Reuters. Oh yeah, dude, that's the dude that got famous from Wake the F Up B. Wake up. Like the dude that goes crazy with the alarm song, that like the techno remix. Like, get the F out of bed, go. That's this guy, right? So that is the guy that's this guy. I forgot. That is him. I think it's like Mark Robelier or something like that. Somebody give me his name. I can't think of it. But that's this kid. All right, chat. We got 15 minutes left until the market. Rebele. Okay, yeah. So. Yeah, so it's this guy. What a world, you know. All right, we're gonna get ready to trade at the opening bell. Again, we're already up a little bit today. We made 150 bucks. We're gonna keep trying to grind this up. We'll start day trading this. Yeah, so I got this new keyboard. I finally I can type much faster on this new keyboard, bro. It's one of these new gaming keyboards. But yeah, interesting. Alright, so yeah, so on my typing test, I broke my previous record. So apparently it does help. How do I go back to my old mode here? Is it gonna make me do a typing test? I guess you gotta take the test to do it, but no, whatever. Yeah, I'm just kind of hanging out, chat. We're waiting. Showed a new keyboard. It's not the most expensive one. Oh my goodness, man. What have I done? Okay, yeah, y'all aren't going to see the new keyboard. I don't know what I just did. Whoa. What did I press, dude? Whatever I just pressed completely took my screen off the... There we go, that's better. Comments. It was 94, 95 words per minute. It was something like... It was almost 100 words per minute is what I can type. Yeah, it has this magnetic strip on it. And I know it's kind of like... I'm not going to say childish, but it's certainly not adult looking, you know? But but it helps me type faster. Look, let me see. We'll do one. Look. Oh my gosh. They hit me with backwards, forwards, and sideways. Kangaroos? See, man, they hit me with these words. Ugh, slacking today, man. See, it's all the luck of the draw, though. Queensland. Yeah, so. Honestly, the last one was much better. But just to show you my historical results. Yeah. Yeah, I have to mute the music in the background because it's just so, like, they make me watch an ad just to get my results. All right, the market did fall down a little bit. Bro, they've made me watch this test 3 times, bro. Okay, there it is. So, yeah, this was only 79 words per minute. My last one was 93. Okay, so for the time being, there's an announcement on Apex. It says, please stop all trading with Rhythmic accounts, and that does not include Trade-Evade. If you are experiencing issues, that is, do not trade any accounts you think have been affected. Do not cancel. Do not remove them. They said, let us check out the situation first. We need time to do so, and then until then, your patience is appreciated. Yeah, so for today, guys, on Apex, there are glitches with Rhythmic accounts. I haven't noticed them. I'm on Trade-Evade today, but I haven't noticed any of the problems. But it's specifically Rhythmic accounts. So again, Rhythmic accounts are the ones being affected by them. Still impressive, no matter what it says. Tell the truth, you're typing with your mind. Yeah, I mean, it all has to do with how fast you can read, is what these typing tests do. Like, it all has to do with how fast you can read. And so if you read fast, you can type fast. But yeah, my last one was my best one ever after the new keyboard, which is 93 words per minute. I had 1 error. So really it was 94 without the error. But yeah. All right, guys. So again, the Q bouncing right off that 200 EMA VWAP level. We'll try to day trade this. We'll get ready to. Yeah, they said don't send tickets to stop trading while they figure it out, is what they said. I read slow, type 75 words per minute. Then you don't actually read so if you type that fast. You might choose to read slow, but if you type 75 words a minute, you're not reading slow. It really is based off of how fast you can read. Oh, can you not hear my music? My bad. I muted the audio for the typing test. Too bad typing is a completely useless skill now, and especially with the influx of AI, it's even more useless, So I got a question. If I go stay at an Airbnb, all right? If I go stay at an Airbnb, is there a tool where I can see if they have cameras anywhere? Because my pet peeve is I don't like to feel like people are watching me. Like even on my cell phone, I have tape over my cameras, my selfie cameras. I don't take enough selfies or pictures to care about it. And I don't want people watching me on the toilet, you know? And so, are there any tools that I can like scan with? I saw a video of somebody scanning. Let me see. Tools to scan for secret cameras and mics. There is a tool. A bug detector is what it's called. Yeah, but in theory, is the bug detector going to show up? Is it going to scan everything with like a chip in it? They have to disclose cameras. It doesn't mean there's not weirdos out there. They're legally obligated to tell you. Yeah. Okay, I read fast but comprehend slow. Sure, yeah, that's a difference. It's just about reading skills. You know, I read very fast as well. Top 3 readers in the world right now for sure. But no, when I cover economic data, people say I read fast. So if I'm reading like an example is like the Fed minutes report, I'll get AI to produce a summary of it, and then I'll read that. It's almost too quickly though to where it's hard to understand. Top 3 readers ever in the world. All right, guys, we got 6 minutes here, chat. 6 minutes. All right, is there a new fake pawn in Discord? I gotta do this every now and then. All right, let me search. Settings. Members. Pawn. No, I mean the only pawn that's here is good pawn. Oh yeah, that's the weirdest part of being YouTube is that there's fake Johns. There's fake Johns. Again, bro, people are weird, dude. Like people are weird. You would be surprised at how many people like. Again, usually it's somebody who wants to grow their own channel, right? So they reach out to me, and if I don't talk to them or help them grow like it's my obligation to, sometimes they just get weird and jealous and obsessive and create fake accounts and pretend to be me and like sometimes stalk. The internet's weird, man. It's a blessing though. Like I'm very happy for it. Maybe I'm just venting right now, but people are strange. They don't have much going on. It's even worse. Like I said, the biggest haters in the world are people who have tried to create a community and failed at it. You know, those are the most unhinged ones, I guess, is the best way to put it. Yeah, we got a Discord group. Yeah. Weirdos out there, yeah. All right, guys. Market's bouncing up a little bit. I'm going to wait for the market open, though. We got $150 in profit today. Yesterday, we made about 600 or so on this funded account. Add a little bit to this. See if we get a little spike. Yeah, it's free. I don't charge for anything, Daniel. So my whole gimmick, if you will, is like everything's free. I don't charge for anything. We have sponsors and stuff, but I don't charge for any content whatsoever. It's all free, and so we're not gonna have any paywalls behind like educational content, live streams, Discords, anything like that. So. You know what I've really thought about updating monitors here because I have 4 big old monitors on this computer. I went to Walmart the other day. They had a ultra wide. It was a 49-inch curved monitor. I could basically replace this entire bottom row of monitors, you know, and just have one big monitor. It would save me so much space and like clutter. Maybe have like, at least I could at least replace these 2 and then have maybe one on the side or something like that. That would work really well. As long as I could block the monitors off to where I could have spaces for different things. I like the 200 EMA, Jose, but everybody's different. Yeah, the curved ones are fun. Yeah, so right now these curved monitors cost about $875 or so. Yeah. Samsung. The G9 is only about $800. Dude, I might buy this right now. I can get the Asus one too. I might buy one of these. Why, when you are profitable, is so difficult to spend? What? 4K TV. Nah, there's lag with TVs on computers, and it's also like they're not the most compatible things, and so it ends up hurting much more. All right, guys, here's the opening bell, chat. All right, here's the opening bell. There we go. All right, so here's the opening bell. Market's fallen down a little bit after the opening bell. Yeah, I mean, I don't know. I like the curved monitors. All right, there's Nasdaq's dipping down right to the previous closing price. Let's see if it finds some legs. I'm gonna wait a couple minutes at least until after the opening bell to trade, I think. I'm gonna put an NVIDIA chart up here. I think NVIDIA is gonna have a lot of influence over it too. SPY's still heading up though. Y'all like this music better than the other typical music I get? Look at NVIDIA spike. See if this spikes tech. QQQ bouncing a little bit as well. Yeah, I'm not gonna sit on Salesforce that long though. So if Salesforce can't hold, I'll you know, it depends. SPY is ripping up though. The Q's following it up to a certain extent, mostly driven by NVIDIA's strength. so there's Nvidia. Q's still struggling though. Nvidia's churning up here, guys. It's kind of dragging the rest of the market up with it. SPY's ripping up too. We're actually green on the day. And what? Why are we so green? What are we green on? Oh, Home Depot. Okay, we added to Home Depot this morning. That's green. Nice. Also, Nike we're green on. Whoa. Target. Nice. Alright, look at the SPY rip up. Q rip it up. Let's see if Nvidia keeps churning. Why the 200 DMA? I don't know. I just like it. It works. Chewy. Alright, let's see. So what am I also in? I'm gonna take a little profit on Target. Just because I can. Take a little bit off there. Lock that in. I also bought Home Depot. Depot spiking up a little bit. Chewy. I'm gonna take some off of Chewy too. Green on that one. We're gonna lock that in. Nvidia's turning though, chat. Ocean Power Tech, man, that's one of the oldest crappy penny stocks in the world. Terrible company. All right, so NASDAQ's breaking down. We might start shorting the market here if we can. Took a little bit off of Chewy. What's dragging the market down? Nothing that we're really in. Our portfolio still looks pretty good. Apple's still green. Salesforce is pretty much flat since the opening bell. All right, we're short. Kind of a risky trade. All right, so we just made about 30 bucks here scalping this. All right, Chewy testing highs again. That's nice. All right, so we're up a couple $100 on the day. In futures. I'm not going to hold Salesforce too long. In fact, I'm going to limit my size on Salesforce just to protect the trade. We'll give it one more second. If it breaks 222, we'll limit our size. It's probably a better decision. I think we got some room. GDP data is right here. GameStop dumping down here too. So we're flushing down. I'm gonna buy this dip. I wanted to buy the dip. I'm gonna cut it. Very volatile open. And yeah, we're gonna cut a third of our Salesforce position off just to be safe. Again, I'm not gonna risk too much. We're down less than 100 bucks on it. I don't want to take too much risk there if it doesn't work out for me. Nvidia's starting to bounce back up though, so I'm not counting out a potential tech rebound here. All right, we're short in the market. We got a nice little cushion, so we will add one contract to this if we can. All right, so we added one to it. Oh my goodness, what a terrible bounce. Punished on my funded account. Now we're down 3 something. Oof. Yeah, we're not gonna trade this one anymore today, I don't think. We'll see though. You said Quant Tower. Let me pull up. I'm gonna pull up Quant Tower, but I want to make sure the issues are not with me, you know. So we're pulling up Quant Tower now. It should log it in. This is mostly driven by Nvidia's strength here. Yeah, Nvidia's flying up. Dragging everything else back up with it. Look at Nvidia on the right. Now, Nvidia's close to all-time highs. CRM down to 220. Yeah, I ended up taking some of that off. I'm still in it, but I ended up limiting my size just because there's too much risk, you know. Yeah, I ended up limiting my size. There's just too much risk. Yeah, there's just too much risk. Yeah, I ended up limiting my size. There's just too much risk. On Salesforce. Salesforce ended up dipping down like 15% from its earnings. And so I ended up buying that dip. My average price is like 226s. So I still got a little bit of room, but like, I don't know. We'll give it time. I don't want to take crazy big risks. It's a game of numbers for me, right? So like, I don't want to take crazy big risks. It really is a game of numbers. If I can get some good numbers in it, great. If not, you know, then it's a small trade. It's not going to destroy me. You know what I mean? That's kind of the logic of it, at least. All right, so that's one of my signals here. All right, so we're still kind of sitting back waiting. I want to see if Nvidia gets more legs or if the market starts to rise back up. Looks like it's rising back up. I'm watching Salesforce still. It's at 222. Yeah, I'm waiting for Quant Tower to show up so I can maybe get back to day trading some, but they say it's really glitchy and buggy today. Yeah, we're getting Quant Tower. Hold up. Nvidia is just flying up. Let me try to take a trade on a challenge account on Quant Tower before we trade a regular account. Let me try. Hold on. Big dip on everything here. Market is kind of sideways too. Him's also flied up. Do you think it's good to buy Google at all-time highs? I'm not sure. Whatever y'all want to do there. Again, I don't know. I'm in Google, but I've been in it for a minute now. I'm watching Nvidia. Nvidia had a big dip and now a big pullback. The whole market's kind of at this unknown indecision level. So we finally got Quant Tower up, but I haven't really tried it. I'm going to try it on a challenge account. Let me make sure this is one of the right ones. Yeah, what's weird is that, like, I'm looking at Quant Tower. It won't even show me my account size today, which is strange. I'm looking at it. The whole market's kind of sideways though right now. It's very strange. Yeah, huge breakdown. And I see those are my toss indicators. I'm not actually trading anything. Market's like indecisive for sure. Salesforce is starting to break down. I'm probably going to sell at least a piece of this off here. A lot of this has to do with Nvidia. So like you can see Nvidia. Sorry, we got contractors here working. I'm gonna take another piece of Salesforce and just hold a very small piece now, very small piece. Trade debate seems to be all right though. Nothing seems to be happening. The whole market's basically sideways. Yeah, somehow I'm still on that same TradeAvate account that we lost 400 on. I ended up making my money back. We're at 360 in profit right now, but it's been kind of a back and forth battle here on it. So we're doing good on that one at least. What's my net profit? So we're only net up 150 bucks, which means we churned a lot in commissions for sure. But I'm gonna go back to trading this one, I guess. Again, sometimes I do gotta trade off stream. It's just easier. All right, here's one contract. Again, at least now we have a cushion to play with, though. TradeAvate's been working fine, but I can't add one contract to this. I'm not gonna do it up here though. Nvidia's breaking highs. We're gonna cut that. Look at Nvidia. So Nvidia has been, look at all these candle wicks on Nvidia over the last like 10 minutes. That's what's causing the choppy behavior. We're not renovating. We're doing some other stuff. Also, guys, if you haven't already checked out Chart Prime. Chart Prime is a trading view service you can use in stocks, crypto, forex, futures. Chart Prime, really powerful thing. Like, look, this is the Market Oracle and the Market Oracle Pro. Just a powerful thing. A powerful thing. Let me show you guys. Let me get my pen out here. There it is. All right, I was looking for it. Check this out. So again, they give you these buy and sell signals on TradingView. You can use them with anything with a symbol on TradingView. Stocks, crypto, forex, futures. Buy signal, nice little bounce. Look at the strong sell signal showed up here. Look at the follow through breakdown. Buy signal showed up here. Look at the massive rip up. Look at this sell signal, literally downtrended. This is a 5-minute chart, so it literally downtrended for days. Buy signal here, beautiful bounce. Sell signal there, little downtrending for days. Buy signal here, beautiful bounce. You know, got this sell signal. Looks like it followed through at least a little bit. But again, 1, 2, 3, 4, 5, 6, 7. 7 out of 7, I think, worked. I'm not going to count this one because it's still too early. And again, I can't guarantee anything. Of course, nobody can. Not an investment professional. Not liable if you lose. They are a sponsor of mine. They pay me money. I'm biased in their favor because they pay me money. But again, just a powerful thing sometimes if you use them. Backtest it yourself, though. I can't guarantee any of these are going to work or anything like that. Nobody can. But if you want to check them out, here's the link. They are a sponsor. Check them out. I don't think we have any other economic data today. I think we have new home sales coming out, which I don't think is going to be a huge influence over markets. Look like John Madden over here. There we go. There we go. But yeah. And again, remember, these are sponsors of mine. I do trade off stream. You're not going to see all my trades. I'm not even claiming to be a good trader. I certainly have my moments, but again, understand CFTC 4.41, hypothetical or simulated performance have limitations, all that stuff. We're just kind of sitting tight waiting for something to go on. All right, so somehow I caught this big move in futures, chat. Somehow I caught this big move. We are up 750 on the day. Whew. Whirlwind of a day here. Salesforce still giving it a chance to bounce back with our... We only have a small amount of shares, so yeah, we're up about 520 net today. Very volatile day, though, to be honest, man. Definitely traded a little risky. My accuracy rate's still pretty good. Like, look, here's my accuracy rate. We are running 67% today. So, but definitely a volatile day. Nvidia's been flat, is what it is. And again, if you want to check out Apex Funded Account Program and Futures, their sale ends today, guys. So by the next stream, by the time I start this stream up next time, I do not think the sale will be live. It might be, but I don't think it will. The next time I start my stream again, take advantage. You get the 250K challenge for only $16 right now. $16. And the sale ends, like, I'll show you. So again, they give you a demo in futures. They test your skill in futures. If you can pass the test with the demo, they fund you the same amount. It's a great way for new traders to get started for less. That way, if you lose, which most day traders lose, it's not the end of the world. The base one is, right now, you can get the 250K one. It's the cheapest one they have right now at $250,000 in funding. If you pass it, you got to hit these parameters. You get real-time data included. And again, it's $16. So very cheap right now. If you use coupon code BT, you'll get the discount. They have packages from 25K up to 300K with a 90% split once you're funded. And so your risk is small relative to risking thousands of dollars putting the money up yourself. But if you pass it, you still get a 90% split. It's similar to putting the money up yourself. It's a good middle ground of pressure. And again, the sale ends in 14 and a half hours, roughly 14 hours. So again, if you want the max discount, use coupon code BT. We'll get you the max discount. I might sign up for a few of these before it closes. But yeah, very volatile day. And equities were pretty much flat, even including the Salesforce trade. We're still flat in equities, somehow. I think the market might be waiting for PCE data. So PCE data, personal consumption, and PCE data is probably what the market is waiting on. So we might have choppiness. It's also kind of Nvidia. Like if you look at Nvidia's up a little bit, but you know, if you look at the market, Nvidia is a big influence over it, but Nvidia has been up and down and up and down. So over the last 20-30 minutes, Nvidia has been flat too, which does influence the market. So again, the Q up, down, up, down, up, down. Very flat range here for the Nasdaq as well. These are, you know, there's other stuff moving also. Again, we're equities wise, we're pretty much flat. Nike's doing me right today, so we're in Nike. We're also green in Intel today. We're also green in Home Depot today, which a lot of these are positions we added to earlier. We're also green in Tesla. We're green in Target. Soundtown, we're green. So not too shabby. Yeah, we have pending home sales, but they're not super important or relevant for markets. But yeah, I'm gonna get out of here, guys. Y'all be safe. Love you all. Y'all be good. I'll see you guys later. Remember though, today's the last day of the sale, so y'all be ready. I'll see you guys later.